People will frequently joke with me, sometimes, that investing is really no different than gambling. And going to the casino is a lot more fun than talking to me, so that's where they'd rather go. Now, after usually a little chuckle about this, I'm always very quick to point out that nothing could be further from the truth. After all of us know that the longer you spend time in a casino, the more likely you are to lose all of your money. Whereas the longer you spend time investing in the stock market, the more likely you are to see your money grow. In today's videos, I'll share with you the 3 top real risk, that I actually see investors face today. Hi, Brad Lupkus, CFP advisor at Frontier Bank Wealth Management and Trust. The number one risk, we'll go ahead and get this out of the way right off the bat, is market risk. There is no question, markets are going to crash from time to time, and neither you, me, or the talking heads on TV are going to be able to predict when it's going to happen. What do we do then in order to prepare for these inevitable market crashes? What we have to do is we first have to make sure that your investments are invested in a portfolio that is compatible with your level of risk. Because when we do get this drop in the market, we need to make sure that your investments, your money, is not in something that is going to drop more than what you're comfortable with. If we do that, at some point you are going to call me and you're going to say, Brad, we lost too much, I'm done with this. And at that point, neither of us are happy. The best way to combat this is to make sure that we have a well-diversified portfolio and we have a long-term financial plan in place so that we don't get scared of the short-term volatility. The second risk that I see is concentration risk. And this is more typically found among people who buy individual stocks. But it can also be seen in people that have worked for a company for a long time and now have a large concentration of that company's stock. The best way to combat this, and the best way to combat the old cliche of don't put your eggs in one basket, is again to make sure that you have a well-diversified investment portfolio where you're not putting all of your money in one particular investment. The third and final risk that I'll touch on is inflation risk. This might be the most dangerous risk to investors and is so often overlooked. Inflation is simply how fast the cost of goods and services increases year after year. Here in the United States, over the last 100 plus years, inflation has averaged about 3.25% a year. What that means is that every 22 years, the cost of that gallon of milk or a tank of gas or a computer is going to double every 22 years. Every investor, young or old, needs to be aware of the dangers of inflation risk, and they need to have a financial plan in place that takes into consideration the dangers of inflation. If you have any questions about these risks or other risks, we'd love to have an opportunity to visit with you.